Hello everyone and welcome. So you want a crypto? Today, let's talk about Chainlink. Just under $14 right now, up 10% in the last 24 hours, doubled in the last month, almost up 93%. What's all the hubbub, bub? Well, there's a lot going on. Starting out as an Oracle network, now Chainlink is basically becoming the new Internet of Contracts is the way I heard it described. Let's look at the numbers. We'll dig into a little bit more on Chainlink. We're going to go into some different ERC token standards and try to keep this pretty painless, but there'll be some deeper information. Find value, like, subscribe, comment, share it, whatever you got to do. Always helps with the algorithm. Chainlink has $7.775 billion market cap. 24-hour trading volume is 878 million. And like we said, number 12 on, this is CoinGecko's list. But we got a good pop right here. Look at this. Boom. Starting to go damn near parabolic right off the bat. What's going on? What's up? You can get this just about anywhere you want. It's on almost all the exchanges right now. So we don't really need to dig too deep on that. But Chainlink is a framework for building decentralized Oracle networks, DONs, that bring real-world data onto blockchain networks, enabling the creation of hybrid smart contracts. These DONs provide decentralized services such as price feeds, proof of reserve, verifiable randomness, keepers, and the ability to connect to any web API. It aims to ensure that the external information, pricing, weather, data, event outcomes, so on, and off-chain computations, randomness, transaction, automation, fair ordering, etc., feed to on-chain smart contracts and reliable tamper-proof. We're not going to look at let's see, here's your DON, the decentralized Oracle network. All right. Bridging the gap, Chainlink unveils cross-chain interoperability protocol to connect traditional finance with crypto. That's what we want to see. Major finance players coming on board. In a statement to the online publication Decrypt, Nazarov stressed that the protocol's promise extends beyond the world of cryptocurrencies and can help close the gap between traditional finance and digital assets. Major participants in the traditional finance industry, such as Swift, BNY Mellon, Citigroup, and BNP Paribas, have already started working with Chainlink. Through CCIP, we will create a private public dynamic that will give access to traditional finance to digital assets and the cryptocurrency space to trillions of dollars. There's a lot of money. I'll break down the different values and percentages here in a minute, but the CCIP protocol from Chainlink, which is currently operational and gathering support from pioneers and titans of the sector, can close the gap between traditional banking and the cryptocurrency ecosystem. The CCIP will transform the financial landscape and open the door for increased cooperation and innovation in the DeFi arena by enabling seamless communication and new opportunities. Link tokens. All right. So the link is a ERC 677, which is an extension of the ERC 20. It inherits the ERC 20 functionality while implementing additional features. Okay, let's see. Let's look at a couple different tokens here. So first of all, EIP is Ethereum Improvement Proposal. These proposals are drafted by members of the community to improve the Ethereum protocol. An EIP is similar to many research papers put forward by Ethereum community members proposing improvements to the cryptocurrency and smart contracts. Each proposal contains an abstract, motivation, the underlying reason, and the technical specifications. In addition, it should also include a rationale and information relating to backward compatibility, security considerations, and test cases, so on. There are 4 types of EIPs: core, networking, interface, and application. We'll just touch on application right now. Improvements around application or token level standards. These are ERC, ERC 20. So ERC stands for Ethereum Request for Comment, and EIP 20 or an ERC 20 is an official protocol for proposing improvements to the Ethereum network. And then I'll show you this here in a second. This is all the different standards and improvement proposals. ERC20 is the standard, this is the widest standard usually. This is what you're getting when you're putting an Ethereum token into your wallet. Tokens are fungible, which means that each of the token has the exact same value as all the others. ERC tokens are stored and sent using Ethereum addresses and transactions. Everyone's pretty familiar with the ERC20. ERC 223 was introduced to fix major drawbacks in the ERC20 standard. It introduced the callback function for receiving contract to handle the incoming tokens via token receive function. Let's go skip ahead here to ERC 677. So 677 aims to provide useful functionality without colliding with the ERC20 standard. So it wants to be used, the standard adds function of transfer and call to the ERC20 standard. And unlike the 223, which overrides the existing transfer function, a little bit more. Basically, it allows you to do, multiple functions in one token. So the major advantage of ERC 677 is that even if the recipient contract doesn't have the on-token transfer function, we can still use the regular ERC20 function address to transfer the tokens. Hence, the requirement of the dependent function of the recipient contract is optional. Right here. To do an API call on Chainlink VRF, the verifiable random function request requires a function call on a smart contract. To do so, you also require a link token. With the regular ERC20 standard, you have to do this multiple steps. You have to approve and call on the contract. But using the 677 standard, you can do both in a single transaction. This, and then it explains it a little bit more. And then there's more standards, 1363. So here's the list from ethereum.org. ERC20, that's your token standard. And we'll go through, there's a bunch of these, but like ENS is going to be a 137. 223 token and transaction handling model. ERC 721 is a non-fungible token standard. 777 token standard. ERC 1155 is a multi-token standard. We've probably heard some of these before. 1363 payable token. Now here's a ERC 721 consecutive transfer extension. Now it becomes a ERC 2309. But then when you start going in here, you can see some of the concepts of NFT functionality and value. NFT royalty standard NFTs, flash loans, abstract storage bonds, semi-fungible tokens, non-fungible tokens tied to physical assets, tokenized vaults, Web3 URL and EVM call message translation. Let's see. Rental NFT, an extension of an EIP 721, royalty-bearing NFTs. Rental NFT, time NFT, ERC 721, time extension. But there's here you go, multiverse NFTs, 5606. It's an interesting read just to skim through these. I'll put all these links like I always do below, and then I'll have timestamps so you can jump around in the video if you want. Let's move on though. The goal of Chainlink is to empower builders. We want to provide people the tools they need to take control of their economic future. Get the latest Chainlink content straight to your box. This is chain.link, connecting the world to blockchains. Here's the CCIP link and, everything else you need. Total transactions valued at over 9 trillion. All right, so from TCP IP to CCI, what the hell is going on here? All right, so Chainlink, basically the way they're trying to describe this is going to be similar to the internet, where you had, instead of knowing how the internet works and everything else, you just interact with things, and the TCP IP protocol makes it all happen, I guess, for lack of a better way to put this. So the Chainlink cross-chain interoperability protocol, that's the CCIP, has officially launched. It's on Avalanche, Ethereum, Optimism, and Polygon mainnets. Basically trying to make everything interoperable through Chainlink. And that's why Chainlink is going to be probably one of the big movers coming up into this next bull run. CCP is now running live on mainnet for early access participants, which includes 2 leading DeFi protocols, Synthetics and Aave. the on-chain gateway for the biggest banks. Now here's what we're talking about percentages. By 2030, at current growth from today's levels, they're looking at a 16x, and a growth from today's levels, if tokenization reaches 42% of GDP by 2030, would be a 70x. But you're looking other financial assets, about 20%, bonds 5%, investment funds 2.5%, other real world assets 30%, home equity 20%, and then equities 25%. While 97% of institutional investors agree that tokenization will revolutionize asset management, there have been two long-standing roadblocks: blockchain connectivity, legacy to blockchain, and then cross-chain interoperability, blockchain to blockchain. And this is what CCIP is trying to overcome. In a recent announced collaboration with Swift, Chainlink CCIP is helping enable end-to-end communication between legacy systems and blockchain networks, as well as interoperability across both public and private blockchains. Over a dozen major global financial institutions and financial market infrastructure providers are participating in the collaboration, including DTCC, BNY Mellon, Citi, Euroclear, and they're trying to create the unified internet of contracts. And you can kind of see the little CCIP and different logos, and here's like Avalanche. Today, the world's contractual value is fragmented across both existing traditional financial system and multi-chain Web3 ecosystem. The fragmentation of blockchain networks is similar to the early days of the internet, where there were separate intranet LANs and consortiums of terminals that couldn't interact with one another. The early interoperability standards completely transformed the internet. TCP, HTTP, and email protocols enabled seamless connectivity between users, who then saw their web applications increase in value exponentially as more people joined the network. So this is what they're trying to compare CCIP to. Now, CCIP provides a connectivity standard that enables traditional finance to easily interact with smart contracts, as well as securely transact across different public and private blockchains. Connectivity both to and across multiple blockchains is critical for creating a unified financial system where tokens and messages can seamlessly flow across different environments. And then this brings it all together. It's a good read. I'll put the link below. All right, so now let's talk about the 5 levels of cross-chain security. Level 1 is a centralized. Level 2 is becoming decentralized. Level 3 is one monolithic network. 4 is multiple decentralized networks. And then if you're a level 5, then you have defense in depth is what they're talking on here. So I'm going to break these down real quick and explain why Chainlink is basically, they have no competition at this level. So billions of dollars in user funds have been lost to bridge hacks. Centralized bridges are one of the largest places that people lose their money. Beyond harming individuals, these losses slow industry adoption and undermine Web3 efforts to create a robust on-chain economy where trillions in tokenized assets are seamlessly transacted on a daily basis. Cross-chain exploits can be avoided in the industry if the industry moves away from centralized and single network bridges toward a defense in-depth level 5 cross-chain solution featuring multiple layers of decentralization and on-chain risk management. So this blog outlines the 5 levels and showcases how CCIP sets a new standard in cross-chain communication, capability of supporting a secure, scalable cross-chain economy for both DeFi and TradFi. So level 1, centralized, we understand we got one owner. It's run through the same single points of failure. Decentralized, we're getting a little bit better. I'm going to skip through kind of quickly here. One monolithic network, a single decentralized network made up of independent node operators. So we're a little better than centralized and decentralized, but not. Then we get multiple decentralized networks. So utilizing multiple independent decentralized networks, DONs, the decentralized Oracle networks, to underpin a cross-chain solution, eliminates single points of failure that we have in some of this other stuff, right? And allows the network to handle greater transaction volume and deal with sudden spikes in usage. For a DON to perform a function, there needs to be a supermajority consensus among its participants. Okay, we're not going to go too deep on that, but level 5. So level 5 cross-chain security achieves unprecedented levels of decentralization by utilizing multiple decentralized networks to secure a single cross-chain transaction, along with incorporating additional risk management systems to identify risks and take actions to prevent them, such as by implementing emergency shutdowns or imposing rate limits. The 5th level of cross-chain security doesn't just give one independent network for your cross-chain data or messages. It gives you multiple networks made up of independent nodes all working together to secure each bridge. So with CCP or CCIP, you get multiple independent nodes run by independent key holders, 3 decentralized networks all executing and verifying every bridge transaction, separation of responsibilities with distinct sets of node operators, and with no nodes shared between the transactional decentralized or DONs and the risk management network. Increased decentralization with 2 separate code bases across 2 different implementations written in 2 different languages to create a previously unseen diversity of software clients in the bridging world, and never before seen level of risk management that can be rapidly adapted to any risk or attacks that appear in the cross bridging. And then this goes through a little bit more. Only CCP reaches the 5th level. They have no competition on cross-chain security using multiple levels of decentralization, which we do believe financial institutions will eventually need to safely manage quadrillions of dollars in quadrillions, eventually bringing the entire capital markets industry on-chain. And that's from Sergey Navarov, co-founder Chainlink. Chainlink CCIP gives Web3 protocols and financial institutions access to cross-chain interoperability with level 5 security. That's why leading institutions such as Swift, DTC, and ANZ, along with premier DeFi protocols such as Aave and Synthetics, are already working with CCIP to explore and enable cross-chain use cases. Backed by an unparalleled level of security and decentralization, CCIP is positioned to become the universal interoperability standard between any public and private blockchain. Swift, collaborating with Swift community globally to test how institutions can use their Swift connection to seamlessly integrate with the multitude of blockchain networks emerging. Institutional investors increasingly are considering investments in tokenized assets as they see new forms of value. But they face a complex challenge. These investments are tracked on a diverse range of blockchain networks that are not interoperable. Each has its own functionality or liquidity profile, which creates significant overhead and friction in managing and trading the assets. The next set of industry experiments with Swift is designed to show how Swift's infrastructure can be leveraged to facilitate interoperability, enabling tokenized value to be transferred between existing systems and both public and private DLT platforms with existing connectivity standards and messaging. The first use case will involve the transfer of tokenized assets between 2 wallets on the same public blockchain network, Ethereum testnet. The second involves transfer of tokenized assets from a public blockchain, Ethereum, to a permissioned blockchain. And the third case will test the transfer of tokenized assets from Ethereum to another public blockchain. Chainlink will be used as an enterprise abstraction layer to securely connect the Swift network to the Ethereum Sepolia network, while Chainlink's cross-chain interoperability protocol, CCIP, will enable complete interoperability between the source and the destination blockchains. You guys starting to put the pieces together here? Large Chainlink wallet reaches all-time high as Link launches parabolic rally. This is November 7th, 2023. The latest data from analytics says that the wallets have reached new all-time high as the projected native asset surges in price. Notes that the number of wallets with 1,000 Link or more reached a new record number of over 27,000. People are buying. Link price soared 76%. Have you added this top performer to your portfolio yet? Chainlink has a significant increase in value in recent weeks. Chainlink's cross-chain CCIP connects various blockchains. Very bullish on this. People are starting to talk about it. Chainlink has partnerships with major global companies and attracting trillions of dollars in value transfers. A lot of money is going to come through. I think Chainlink is going to be doing pretty well. I'm just kind of skipping through some news right now. Trader predicts more rallies for Chainlink, and one AI-focused crypto calls for all-kind market cap breakout. Right here you can see they're doing a little TA where basically they've broken out of this wedge. And it looks like we're getting ready to test. We're over 1245. Vodafone and Chainlink show that blockchain can support global trade process. Vodafone's digital asset broker, DAB, has demonstrated blockchain can be used for trade. The telecom giant ran a proof of concept on trade document transfer with Web3 services platform Chainlink Labs, Sumitomo Corporation, and InnoWave to address long-standing challenges in the $32 trillion global trade ecosystem. The proof of concept enabled devices to act autonomously and produce information that can be translated by a computer to support trade processes. The companies use Chainlink's cross-chain interoperability protocol, the CCIP, to provide security and interoperability as data and tokens were shared across public and private blockchains. Vodafone, DAB, and Chainlink are showing how their platforms can be combined to cut through the sea of incompatibility by bridging traditional markets with advanced decentralized platforms. For instance, cargo vessels detecting a fire could autonomously relay data to smart contracts via DAB's platform and CCIP, potentially triggering a marine cargo insurance process. So this goes well beyond just traditional finance. We're starting to get it into, maybe the tokenization of real world assets and information. This is talking about getting into insurance platforms and everything else. But Chainlink is going to be a key player in all of this. And this is not financial advice, but it's definitely on my list of tokens projects that I'm looking to start DCAing in more. And I'd be looking forward to your comments, what you think on Link. Are we looking to pump? Because some of the stuff I see, we're talking 17 to 100x by 2030. That seems like pretty good growth to me. If we go back and look at Chainlink all-time high, we're about $50. So we're at least 5x or 4x from where we are right now. And it's starting to move. Whether this is going to continue, whether there's a pullback, I don't know. I don't think anybody knows. But honestly, the bullish sentiment looks like it could continue, and we could see some good growth on this. That's my opinion. I look forward to yours. Cheers.